tariffs.
The fallout from Trump's trade war is continuing tonight. Markets around the world reeling from historic losses amid hints of more turmoil to come. And with billions wiped off the bottom lines here at home, Aussies are being urged not to panic.
After 24 hours of worldwide economic freefall,
Donald Trump's new tariff policy continues to shake the
investor uncertainty again on display overnight.
Today, a slight rebound in global trade.
The market desperately wants to reverse and you could just feel it.
But warnings, it could be what's known as a dead cat bounce. A minor recovery following a major plunge before the markets continue to fall.
The introduction of tariffs and the retaliation has changed the rules of global trade. But what we don't know is where do we go from here? And it's all that uncertainty that's really contributing to the sharp sell-off in stocks.
Market volatility on full display today as rumours lasting just 7 minutes sent a $4.2 trillion shock through Wall Street.
I think there was a rumour that there was a 90-day pause, which the White House has since denied.
Trump today dropping another ultimatum in response to China's 34% retaliatory tariff.
If that tariff isn't removed by tomorrow at 12 o'clock, we're putting a 50% tariff on above the tariffs that we put on.
Before turning his attention to us, resharing this wildly inaccurate comment about our beef industry.
Australia has sold $29 billion worth of beef in the United States, and we haven't been able to sell one hamburger in Australia.
Actually, our beef exports to the US are worth around $3 billion a year. Here at home, Aussie super balances are now down a whopping 10% this year.
Australians are poorer than they were just a week ago, and we know there's still a great deal of uncertainty. The buffers just aren't there.
Now, calls are growing for the RBA to stem the bleed and call an emergency meeting with interest rate cuts all but certain.
As of yesterday, they were factoring 5 interest rate cuts by the end of the year, all because of a real concern of a global recession. The Reserve Bank really should reconvene.
So what's the good, the bad and the ugly of what all this means for everyday Aussies?
Consumer finance expert Joel Gibson is here to tell us more. Joel, first of all, many Aussies have seen thousands wiped off their super balances. What should they do?
Well, in most cases, I know it sort of goes against everything that feels natural, but we should do nothing. Because if you've got a plan, if your super is invested in a fund with professional fund managers who are investing that super based on your age and how far out you are from retirement, then you'll have time to recover those losses from the past few days. If you'd sold all your shares on Monday after the rout, for example, you would have missed out on the rebound of around 2% and a bit on the Aussie market today, for example. So as much as it doesn't feel right, the smartest option, unless you're a sophisticated investor, is actually to do nothing.
OK, what about older people then, perhaps who are considering retirement within the next few months or years? Should their game plan be different?
Well, their game plan should be different already. I mean, obviously, if you're in retirement or nearing retirement, then yeah, you should have some of your money invested, maybe 3 to 5 years worth of money invested in cash, and then some other money invested in growth assets like shares, so that you have time again to recover the losses in those investments. If you don't have a plan, then this is a fantastic reminder. Go out and get one.
OK. All right. Well, even if we don't go into recession, although it kind of feels like we're already in one, what effects are we likely to see?
They say when the US sneezes, the world catches a cold, so we won't be immune from that. We will see probably slower growth here. We might see higher unemployment. One upside is that we might see lower inflation, because as Asian countries, for example, have to find new markets for their cheaper goods, more of that might come to Australia, whereas it used to go to the US. So that would lower our prices here, and then an upside of that is the RBA may cut rates for borrowers more times this year than was previously expected. So the consensus among the big banks and a lot of the big institutions is we'll get 3 rate cuts this year. It used to be 2. So they've already adjusted their forecasts on the basis of what's happening in the US.
Joel, one group that could suffer, that no one seems to be talking about, is investment bankers, hedge fund managers, stockbrokers. I'm worried they're not going to get their bonuses this year. Is there a way we could maybe start a GoFundMe, maybe pass the hat around just to help these people out?
I think that's a fantastic idea. I would love to see someone do that, because I would love to see how paltry the response would be. But I think, you know, when it comes to money markets, the really good ones, Warren Buffett, for example, started converting his shares into cash a couple of years ago, and he's got $300 billion worth of cash sitting there just waiting to pounce on the opportunities now that so many shares are underpriced. So the good money market people will get paid, don't you worry about that. It might just be the ones who aren't so good who miss out on their bonuses this year.
Well, our audience is terrific, so let's see if we can get another $50 billion for Warren Buffett. Guys, dig deep.
Joel, thanks so much for your time.
Thanks, guys.
Wowzers.